I'm going to be talking about a recent judgment from the Supreme Court of Appeal. This was a judgment handed down in December, I think just as many of us were kind of hopefully winding things up for the end of the year. And this is, of course, a matter that has gone on appeal. I think many of you might remember the High Court case that we discussed. It would have been back in, I think, the September 2020 update. And if you want more information on that, you can go back and pick up that monthly update from September 2020. But this is the matter that has now been taken on appeal, and we have a look at the outcome of the SCA. Right, so that's that issue around the voluntary disclosure application. Then we go on to have a look at recent SARS documents and notices. And the one is the draft interpretation note on the deduction of home office expenses. Now, this is an update, issue 3. They were originally issued in May 2021, open for comment. And then SARS has effectively reissued this draft, still issue 3, but taking into account comment from various commentators. And then importantly, an important update around the deduction of bond interest. And that's really what I'm going to be driving at, is what is changing around the deduction of interest paid on a person's bond that is used to finance the home from which they conduct a home office. Okay, and then the third one, looking at VAT issues, and those are issues that have come out of VAT Connect issue 13 that was recently published on the SARS website. Okay, so 3 very important aspects that we're going to be covering. Let's go straight into the first aspect, looking at the Purveyors case. Right, so as I mentioned, this is a decision from the Supreme Court of Appeal handed down on the 7th of December. And this was an appeal against the 2020 High Court decision. And that decision looked at the question of whether the taxpayers' VDP application was valid, and looking particularly at this issue around whether it was a voluntary application. It caused quite a few ripples in the tax world at that time. And let's have a look and see what's happened now that the taxpayer has taken the matter on appeal. Now, just looking back at that High Court judgment. So this is really what came out of the discussion that we did in September 2020. And a summary of that judgment. Again, remember, this is the High Court judgment from 2020. So it was looking at sections, specifically section 227 and 226 of the Tax Administration Act. And those are the provisions looking at the voluntary disclosure program, looking very specifically at what is a valid application. All right, in order to qualify for the voluntary disclosure program, you have to have a valid voluntary disclosure application. And that cuts into, and that is provided under sections 227 and 226. Now, the facts of this particular case were that the applicant, the taxpayer, Purveyors, had imported an aircraft into South Africa. This goes back to sort of 2016, 2017. And they had not paid import VAT on that importation. They had concerns about whether they should have paid import VAT, and they took advice both from the auditors and also from SARS. And that is what's really relevant here, is that they had approached SARS on the matter. And SARS had advised the taxpayer that they should, in fact, have paid the import VAT, and they would therefore be liable for penalties due to not having paid that VAT. Interestingly, that it was about a year after they received that letter from SARS telling them that they should apply. Now, notice that SARS had not commenced an audit, and that's important. SARS had not been doing an audit of this taxpayer. The taxpayer had simply turned to SARS for a view as to whether, in fact, that should be paid. And once they had received a letter from the SARS official indicating that, in fact, there was a VAT liability, interestingly, only about a year later, the applicant applied to SARS for the voluntary disclosure program. And this is under the Tax Administration Act. And when I say it's looking at specifically section 226 and 227, it's looking at what is a valid VDP application. And in this particular case, SARS had advised the applicant that it, in fact, had not met the requirements of section 227, and it was therefore not a valid application. And therefore, in effect, the taxpayer was not eligible for the voluntary disclosure program. So when we look at section 226 of the Tax Administration Act, It tells us about the qualification of a person subject to audit or investigation. As I say, this taxpayer was not subject to audit or investigation by SARS. But we look at section 227, which contains the requirements for a valid VDP application. And I'll go through those requirements just now. But one of the key requirements is that the disclosure must be voluntary. And this really became the crux of this particular judgment, is whether this disclosure was voluntary. And in fact, it was held by the High Court that the disclosure was not voluntary because SARS was already aware of the information, not because of an audit or investigation, but because the taxpayer had turned to SARS and asked SARS about whether VAT was payable. So in terms of what came through from the judgment in 2020, and this is from paragraph 14 of the judgment, three main points. One, the interpretation put forward by the applicant, the taxpayer, was too narrow and does not accord with the purpose of the said sections or what they seek to achieve. So looking at this question of a valid application, the taxpayer took the view of saying that section 227 talks about a voluntary application. In section 226, subsection 2, it tells us that if the person seeking relief has been given notice of an audit or investigation which has not been concluded and is related to the default that has been disclosed, then the disclosure of the default is not regarded as voluntary. And so the taxpayer had the argument of saying, well, because they had not been notified of an audit, whereas this provision says that if you have been notified of an audit which is still underway, then the application is not voluntary unless you get approval from SARS to go ahead with the application. So they were taking this from the opposite side, if you like, and saying because they had not been notified of an audit, therefore the outcome is that this will be a voluntary application. So they were taking that view, and the court held that that interpretation of that particular provision was too narrow. It doesn't accord with the purpose of the said sections or what they seek to achieve. So looking at the approach of how to interpret tax legislation, looking at the purpose of approach, what is the purpose of the provision, what was the purpose of Parliament in approving this provision, what is the provision actually seeking to achieve? Now, this particular provision, of course, is indicating who is eligible for the voluntary disclosure program. We all, I think, are in agreement that the voluntary disclosure program confers significant benefits on people who can access that particular program. And so SARS has taken a rather narrow view in terms of what we mean by saying that the application is voluntary. So the judgment that came through from the High Court here was saying that this particular application was not voluntary for the reasons referred to, and I'll come to those reasons in a moment. And as a result, there was no disclosure to the respondent of information that it didn't already know about. So SARS already knew about these transactions. The taxpayer had already notified SARS and asked SARS for guidance as to whether VAT was payable or not. SARS came back and said VAT was indeed payable. And so the judgment here was saying, well, there's nothing that SARS didn't already know. So when you look at voluntary disclosure, are you actually disclosing something to SARS of which they were previously unaware? And the conclusion here was indeed that was not the case. And therefore, we don't have a voluntary disclosure. Now, let's just have a look at section 227, the requirements for a valid voluntary disclosure. So the disclosure, in order to qualify for a valid application for a voluntary disclosure process, you have to meet all of these requirements, okay? And it says that the disclosure must, in the first case, be voluntary, because the very nature of this is a voluntary disclosure program, right? That's the whole nature of this program in Part B of Chapter 16 of the Tax Administration Act. So it must be voluntary. Now, we don't have a definition of voluntary in the Tax Administration Act, so we have to rely on the ordinary meaning of the word, but also look at the context in which that word is used in this particular provision, and having a look at the purpose of the legislature to see what is it that they would actually mean by this. Okay, so we'll come back to that, because that, of course, is the main focus of both the High Court case and then going on to the Supreme Court of Appeal decision. Then, secondly, it must involve a default which has not occurred, and you haven't had a similar default occurring within the last 5 years. Now, default means, and this is also important, it means it's a submission of inaccurate or incomplete information to SARS, or the failure to submit information, or the adoption of a tax position and where that has resulted in an understatement, right? Understatement, and that's an understatement that would give rise to an understatement penalty, and that links back to Section 221, which defines an understatement as a prejudice to SARS or the fiscus as a result of one of the following 5 things: a failure to submit a return under the Act, an omission from a return, an incorrect statement in a return, or if no return is required, failure to pay the correct amount of tax, or an impermissible avoidance arrangement. Okay, so in order to have a default, you have to have submission of inaccurate or incomplete information or failure to submit information which has given rise to a default. Okay. Now, I've highlighted the words voluntary and default here and disclosure, because those are the 3 key aspects of a valid voluntary application, voluntary disclosure application. The key things are that there must be a disclosure, it must be voluntary, and it must involve a default. Yes, it does go on to say that your disclosure must be full and complete in all material respects. It must involve a behavior referred to in column 2 of the understatement penalty percentage table in section 223, and those behaviors are substantial understatement, reasonable care not taken, no reasonable grounds for a tax position, impermissible avoidance arrangement, gross negligence, or intentional tax evasion. All right, so it must involve one of those behaviors. Remember, we're talking about something that has given rise to an understatement and would potentially carry an understatement penalty. And then it must not result in a refund by SARS, and it must be made in the prescribed form and manner. Right, so in order to have a valid voluntary disclosure application, the key things which are kind of open to interpretation are this aspect about disclosure, voluntary, default. Now, I've spoken about default. This judgment of Purveyors focused carefully on this question about whether there had been a voluntary disclosure. And going back to the High Court judgment of 2020, and in paragraph 7 of the judgment, it was stated as follows: it was the applicant's contention that the crux of their case was that at the date of submission of the application, they had not been notified of the commencement of an audit or criminal investigation into their affairs, and such thing not having been concluded. So they had not been notified that they were under audit or investigation. And so their conclusion, as I mentioned earlier, was because we've not been notified that we are under audit or investigation, this must be a voluntary application, because section 2262 says it's not a voluntary application if you've been notified that you're under audit or investigation and that audit or investigation is still underway. So they're saying we hadn't been notified, therefore this would indeed be a voluntary application. But SARS disagreed, and they said that in itself, section 2262 in itself is not a either this or that kind of provision. It's saying that if you have been notified that you are under audit or investigation and that audit or investigation is still underway, then your application will not be regarded as voluntary unless, it goes on to say, a senior SARS official is of the view that they would not have detected that particular default in their investigation, etc. All right, so you can't say that because you're not under audit, this is therefore a voluntary application. So SARS had contended that section 227, in terms of these requirements for a voluntary disclosure, envisage a disclosure of information or facts of which SARS had been unaware. All right, so that's the gist of this. It's looking at those 2 aspects together: voluntary disclosure, all right, that you are telling SARS something that they didn't already know. And they go on to say the further question in this particular case, the 2020 case, was whether the application was voluntary, and they say the term is not defined. So we use its ordinary meaning, which is that it's an act in accordance with the exercise of free will. If there's an element of compulsion underpinning a particular act, it is no longer done voluntarily. And in the context of Chapter 16 of the Tax Administration Act, Part B, that deals with the voluntary disclosure process, a disclosure is not made voluntarily. Sorry, I'll copy this from the judgment, so there should be some grammatical corrections here. A disclosure is not made voluntarily where an application has been made after the taxpayer was warned that it will be liable for penalties and interest owing from its default. Okay, so this is what is interesting, and this is what gave rise to such controversy at the time of this judgment back in 2020, is that are we then saying that just because a taxpayer is worried about penalties and interest, they know there's a default, they know the default needs to be rectified, if they become if they have been warned that they are liable for penalties and interest owing to that default, and they then apply for a voluntary disclosure application, does that mean that it's no longer voluntary? Because in essence, that is what this part of the judgment is actually saying. And it went on to say it was submitted that the application was brought in fear of being penalized with a view to avert the consequences, and therefore was not a voluntary application. Very concerning. Lastly, it was contended, and this is still the 2020 judgment, it was contended on behalf of SARS that there had been no disclosure of information of which SARS was unaware. They knew all about it. The taxpayer had already approached SARS. SARS had the information. So did this disclosure now tell SARS something they didn't already know? And the answer was no, it was not the case. When the applicant made the application, it was obviously aware that SARS knew of the default. It in fact disclosed nothing new, and therefore it was not a valid application. So there can be no disclosure to a person if the other already has knowledge thereof, certainly not in the present statutory context. So the rationale for that is looking at the terms voluntary disclosure. You're actually disclosing something that SARS did not already know. Now, that was the outcome of the High Court case in 2020, and the taxpayer then took this matter on appeal to the Supreme Court of Appeal, and this is the judgment that was handed down in December 2021. And it related to this question of the VDP application that had been rejected on the basis of not being a voluntary application in terms, and therefore not a valid application under Section 227. And in the judgment, it said this. It said the VDP application was prompted by compliance action by officials of SARS and the advice it received from its auditors. In the light of the aforegoing, it is clear that in order to escape payment of penalties and interest, Purveyors submitted the VDP application. And it was stated, I agree with the High Court. It actually said the tax court, but clearly it's talking about an appeal against a High Court decision. I agree with the High Court that the application by Purveyors was not voluntary and did not meet the requirements of Section 227 because SARS knew of the default and warned that it would be liable for VAT plus penalties and interest. Nothing new was disclosed in the application. That said, the appeal must fail. Right, so unfortunately, for the taxpayers and for the tax-paying community, I think, unfortunately, the decision of the High Court in 2020 has now been confirmed by the SCA to say that in order for this to be a voluntary application and meet the requirements of Section 227 of the Tax Administration Act, when you make this disclosure to SARS, you must be disclosing something to SARS of which SARS was not previously aware. Not specifically a question of whether the taxpayer is under audit or not. Yes, that does exist in Section 226. It does refer to situations where specifically it is not a voluntary application. So that's what Section 226 tells us, is that it is not a voluntary application when the person is under audit or investigation, which is still underway unless a senior SARS official basically gives approval for the VDP to the application to be approved. However, what this judgment is saying is that it is broader than that. It's not just a case of saying that if you don't fall into Section 2262, then it is a voluntary application. You still need to look at the ordinary meaning of the words of voluntary disclosure. And based on that, if you're telling SARS in your VDP application something that they already know about, then it is not going to be a voluntary application. And that means it's not going to be a valid application. Now, towards the end of 2021, SARS did release this draft guide on the voluntary disclosure program. It was open for comment until the 10th of December. Now, as I am putting this webinar together, we don't yet have an updated guide. So we're still using what was there in October prior to the SCA judgment that came out in December 2020. But since the SCA judgment doesn't differ at all from the High Court judgment. It really just confirms. It doesn't really add anything as far as that the interpretation of Section 227 is concerned. And so it may well be that this draft guide is updated to reflect the SCA decision. It would make sense to put that in, but it's not going to lead to any different outcome from what was in the first draft of this guide. So let me just click on this guide and just take you through this. And you'll see here, this is now, it is a draft guide. It hasn't been finalized yet. So I have that reservation as I presented in this update, but it is the latest that we have from SARS. Now, you'll see that when it goes through the voluntary disclosure program and it talks about the application and it talks about the definition of a default, which I spoke about earlier, the persons that may apply, disqualification if you're subject to audit or investigation. Then it goes into what is a valid voluntary disclosure. And let's just click on that. And of course, it goes into this question of whether it is voluntary and of course the default and the fact that it must be a voluntary disclosure. All right. So in terms of the term disclosure, let's just have a look at that. It does clarify here that disclosure, well, none of these terms, okay, default is defined, but disclosure and voluntary are not defined in the Tax Administration Act. But the term disclosure, according to the Cambridge Dictionary, means to make something known publicly or to show something that was hidden. And that's where this concept comes from, that if SARS already knows about your default, it can't be a disclosure. All right, so it means you're disclosing to SARS something that they didn't previously know about. They go on to a bit more detail here. I'm not really going to go into all of this. You can read this in the guide, either the draft guide now or when the guide is finalized. Okay. Maybe I should just highlight here that when you talk about the shorter Oxford English Dictionary, disclose means to open up something closed or folded up, to expose something that, wasn't previously known. And that's the key concept that's coming through here. And they give this example of an application that is not a disclosure, and that's where Company D was registered. They were required to submit VAT returns, but they have not submitted returns. They submit an application for voluntary disclosure relief. Now, these VAT returns from January 2016 all the way through to May 2020, obviously they are outstanding, all right? They have not been submitted. SARS is already aware of those outstanding VAT returns because they are reflecting as outstanding on SARS records. And because SARS is already aware of the outstanding returns, it says the VDP application cannot be viewed as a valid disclosure. You're not telling SARS something that they didn't otherwise know about. And this is certainly going to be quite controversial, but this is how it is put. And this is only going to be strengthened by the SCA judgment, in my view. So in this particular case, Company D will not qualify for the voluntary disclosure relief. All right, so a VDP application made by a taxpayer who knowingly submits nil returns to avoid having outstanding returns. Therefore, on SARS system, it's not showing that there's any outstanding returns. But they then apply for voluntary disclosure relief will be rejected because such application will not be regarded as a valid voluntary disclosure. All right, so it really does indicate to us that this voluntary disclosure program is not as simple as it might seem at first glance. And this question about meeting the requirements of Section 227, is it a valid VDP application? It becomes really very important. You'll see here that in this question of voluntary, they again look at the Cambridge Dictionary to look at the ordinary definition of the meaning of the word voluntary: done, made, or given willingly, without being forced or coerced, okay, well, in this case, or being paid to do it. Well, you're certainly not going to be paid to submit, but you do save a lot of money by way of penalties if you do get approval to go ahead with a voluntary disclosure program. But in this case, without being forced. Now, they do refer to the High Court judgment of Purves, and this is the part I'm sure they will update with the SCA judgment that came out in December. But basically over here, SARS had warned the taxpayer that penalties would apply because of the failure to have paid the import VAT. And so the SARS knew about the default and they had warned the taxpayer about the penalties. And then a year later, as I said, the taxpayer applied. And so on this case, it was held. SARS, first of all, declined the application as not being valid, and that was confirmed by the High Court, and now most recently has been confirmed by the Supreme Court of Appeal. All right, so basically, you can see here with the judgment, the court's rationale, looking at this whole question of voluntary, all right? And notice that it's put here where an application has been made after the taxpayer has been warned that it will be liable for penalties and interest owing from its mentioned default. It submitted that the application was brought in fear of being penalized with a view to avert the consequences. I mean, this does make it very difficult in some cases, because surely there's always the underlying concern about penalties and interest. And the key thing is to be able to demonstrate that you were not forced or coerced by fear of penalties and interest to make this application, that it is that you are wanting to rectify your tax matters. I mean, that's what the purpose of the voluntary disclosure program was from the outset, is that it would provide a means. It was like a permanent amnesty. Remember those days of having amnesties for certain periods of time? This was a kind of a permanent amnesty where it gave the taxpayers the opportunity to rectify their non-compliance, but not where they are being coerced because they're in fear of penalties. I know it becomes a very difficult one to draw a clear line and to see when that line has been crossed, but it is going to be an increasingly complex area, I think, unless we get any further clarity from SARS around this question of a disclosure being regarded as voluntary or not voluntary. Okay, so I just want to bring that to your attention, to just be careful when you're applying for a voluntary disclosure program, to make sure that you properly demonstrate that you have met all the requirements of Section 227, crossing into Section 226 where appropriate in terms of having an audit or investigation underway. And watch out for the updated guide on the voluntary disclosure program to see what additional guidance SARS is going to give us on this matter. Okay, but let's close it there. I think enough said on this question of the case of Purveyors.